Week ahead. I want to start off by talking about Tuesday. Tuesday, you see the single prints coming straight down very rapidly in the morning, followed by consolidation on the lower end. This represents a liquidation break. And what is a liquidation break? Short-term money got too long, and then they forced to liquidate. If this was more than a liquidation rally, the market would become elongated. But the fact it becomes so truncated is an indication of liquidation, but not liquidation and new money selling. The market went from one extreme, being too long, to another extreme, being too short. In other words, what happened? Short-term traders were just jumping on price. So then we get on Wednesday, we get a short covering rally. So you see the single prints and then followed by a truncated top. In other words, this looks somewhat like the letter P, the base of the P and then the P itself. The previous rally looked like the letter B. So we had long liquidation and short covering. Now, on the short covering rally on Wednesday, I sent two messages. One text message to a longtime friend and client, and another telephone call. And my comment was that Wednesday was the weakest market that I have experienced. And what do I mean by that? When I'm looking at this, when you take a look, here is half back from the previous day. Look at the break. The market breaks to just about half back, C and E match, D and E match. This is an indication of weaker hands buying. Then the market continues on up in that P-shaped formation. In other words, this is an indication of short covering, not a combination of new money buying. When I looked at this total combination, I thought it was the weakest single day I had ever seen. Now, there's a lot more involved in that, but it was the mechanical nature of these C and E matching lows. Look at right down here, the L and M lows, how close they are, and it's truncated. It's not elongated. Following, because I thought the market was that weak, this was what the market did following NVIDIA earnings. When those markets spiked, following those earnings, I bought puts based on how weak I thought the market was. Again, what also contributed to the weakness, that the market failed to take out the high from the previous day. If you had any real strength, you would have gotten up there. So I bought the puts, and now I'm sorry if this sounds like bragging, but my commercial, activity in this market is coming to an end. I'm going to be 86 this summer, and it won't be much longer that I will, call it quits. But Thursday was the biggest single trading day I've had in years, up 9.4%. The reason was because I thought Wednesday was so weak. When the market spiked, short-term traders were just following price, bought out of the money puts, and of course, then you got the big liquidation break the following day. Okay, I only bring this point because really what I want you to start to understand is short-term trading. You have to look at how, not just price, but you have to look at the structure of the market. What is the market able to do? And understand the difference between new money buying and short covering and long liquidation. Okay, a lot of this is in the book the current book. It doesn't, a lot of people don't like the book because it doesn't give you nice setups and everything else. But these little nuances that are so important to understanding what is really going on on a short-term basis are covered in that book. Okay, now for the week ahead, the market remains within this extensive trading range that we've been into for about 3 months. The market was exceptionally weak on Friday. Now, we don't know what's going to happen come Sunday, because one more time we have an extraneous event. We have the military action that took place Saturday night. If there is a real breakdown in the market will find acceptance back down below the 6,800 level. Failing to find acceptance back below the 6,800 level keeps us in this large trading range. Acceptance back down below 6,800 represents a downside breakout. Expect there to be an awful lot of emotion in the market as we enter Sunday night and Monday morning. But remember, what happens so many times when the market gets emotional like this, even if you get a direction to it, the market constantly gets too long and too short. Emotions are very high. It's a very dangerous market to trade. Anyhow, good luck. Have a great week. Thank you.